Money FM 89.3, the best of the afternoon update. Viewpoint.
Money FM 89.3. Now, shockwaves are tearing through markets in the US, Asia, and Europe in the wake of President Donald Trump's so-called Liberation Day announcement, upending economic forecasts and intensifying worries about global growth. We are seeing some foreign leaders signaling readiness to negotiate, while others are threatening counter tariffs. Bringing things closer to home, the countries of the Association of Southeast Asian Nations, or ASEAN, are collectively the US's fourth largest trading partner and a major destination for American foreign investment, while ASEAN is now China's largest trading partner and figures prominently in China's ambitious Belt and Road Initiative. On Viewpoint, we'll dive into the sweeping tariffs introduced by President Trump and their potential impact on Southeast Asia, with a particular focus on Singapore. Antonio Fatas, Professor of Economics at the prestigious INSEAD Business School, joins me now to weigh in on the latest developments. Prof, great to have you join me this afternoon.
Thank you. Good afternoon.
Now, Prof, I was just watching a news video clip of an exchange between President Trump and a journalist earlier today. I think it happened overnight in the US. And the reporter posed a question. He said the markets today are down the worst day in years because of the tariffs. So how is it going? And in response, President Trump has basically shrugged it off, saying, and I quote, "I think it's going very well. It was an operation like when a patient gets operated on." And then he went on saying he had said it would be exactly the way it is. The markets, stocks are going to boom. And his last words from that clip, at least, was, "I think it's going to be unbelievable." What do you make of his response, especially with markets across the world falling sharply? And if you could, for the benefit of our listeners who may not be fully up to speed, give us a brief overview of these latest tariffs and what makes them different from the previous rounds of tariffs we've seen in the past.
I mean, I think to answer your first question, I think he's just making things as we go along. This was not his plan, in the sense that he had talked about the stock market booming after the election. So that was his prediction. Now that it's going against him, he's trying to tell a story that is a short-term pain, this patient that needs surgery, and then everything is going to be perfect in the future. But that logic, to me, first, doesn't make much sense, but also is contrary to what he had said. So it is not a strategy clear. To me, this is improvisation. And that's the word improvisation that I would use to characterize what happened with tariffs. Why are they different? Because the numbers that were given to different countries were completely arbitrary. They have nothing to do with the tariffs that those countries have on the U.S. There was a calculation that was done that clearly was not done by economies. I don't know who did those calculations. So we have here a set of random numbers that are applied to countries. Some countries won the lottery and they got a low number. Some countries lose the lottery and they got a high number. And now we're trying all to figure out what these numbers are going to do. But these are very high numbers. So again, you're asking for a context. This is nothing compared to what he did in 2018. These are very large numbers that are going to have a serious impact if they stay at current levels.
Yes, Prof. And many countries in this region have had growing trade relations with the U.S., but these new tariffs could potentially disrupt that. And I'm just thinking the escalation of U.S.-China trade tensions now extending into technology, strategic industries, and national security. I think it's clearly having a significant impact on Southeast Asia, which is deeply integrated into East Asian supply chains. So at the current tariff levels after China, we are seeing Southeast Asia being the hardest hit region, with Vietnam being the biggest loser at 46%, if I'm not mistaken. And then we have Cambodia, Laos, Vietnam, Myanmar, Sri Lanka, Bangladesh, Thailand, Taiwan, and Indonesia, all facing fees above 30%. So what are your thoughts on this, given that China is deeply integrated in Asian supply chains and is a top trade and investment partner for many Asian countries?
Yeah, I mean, I think this is such a shock for these countries. Vietnam is one of those countries that has lost the lottery, using my terminology before. They got a tariff of 46%. Now, Vietnam was a country where many companies in recent years were moving from China to Vietnam both for economic reasons, because salaries are now higher in China, so they're looking for sort of lower labor costs in other countries like Vietnam, but also for strategic reasons, because the U.S. had been targeted China as a potential enemy, and companies were worried that producing in China could be an issue going forward. Now they all moved to Vietnam, or some moved to Vietnam, and now Vietnam gets one of the highest tariffs in that list, in fact higher than China, at least in that table. So this is again a little bit chaotic for these economies to handle not only the high level of tariffs, which is a big shock to them, but also the uncertainty. What is coming next? What would happen in 3 months or 6 months or a year? So no one knows. And these are very high numbers with a 46% tariff. How competitive can you be as a country exporting to the U.S.? I'm not sure. I'm not sure how many companies can continue exporting when they're going to have a tariff of almost 50%. That's a really high number.
What do you think will be the short-term direct and indirect impact for Southeast Asian countries, assuming the tariffs stay at the announced levels?
I think you're going to have a slowdown in growth. I think exports to the U.S. will decline. I think the uncertainty will make many companies be very cautious of spending, hiring people, and you start already hearing that noise. So to me, this is a clear slowdown in growth rates and a lot of a wait-and-see attitude by companies, which is not good for growth. So again, to me, it just calls for lower growth rates across the board, because the moment one company stops investing in one country, there will be spillovers to another country. So this is not just a story about China. It's not a story about one country. It's a global story, and certainly a regional story for Asia.
And I would imagine profit margins are not going to look very pretty. The economic outlook definitely quite uncertain here. And speaking of uncertainty, let's focus on Singapore for a moment. Singapore is relatively spared. Even then, the imposition of a 10% tariff on all imports into the U.S. came as a surprise to some. I think a former U.S. senior trade official called it an unexpected move against a close ally. Why do you think Singapore was included in the sweeping new tariffs?
Everyone was included. There were 200 countries included. There's not a single country that was excluded, and Singapore got the lowest tariff. So they should be happy. Singapore should be happy that we got the lowest tariff on the list, because 10 was the minimum. Again, that was a little bit the arbitrariness in which these things were done. Singapore won the lottery, and it got the lowest possible tariff they could get. So I'm not surprised that Singapore has a tariff, because this is what I expected. I expected tariffs across the board. That's what he said he would do. He's done it. Again, Singapore has less of a challenge than Vietnam has. A 10% tariff, you could absorb it in profits. It's not ideal, of course. You could maybe raise prices a little bit and still be competitive. So a 10% tariff is, I'm not saying it's ideal for Singapore, it is not, but at least it's manageable. And I think the other countries are going to suffer more, but as those countries suffer, Singapore is going to have spillovers from the fact that the region is slowing down as well.
Going to specifics, being a global trade hub and financial center, Singapore plays a central role in the Southeast Asian economy. How might these tariffs specifically affect Singapore?
I mean, Singapore is always an economy which is very exposed to what is happening in the rest of the world. As a small, very open economy, when the world slows down, Singapore will slow down for sure. It's very hard to isolate when you export and import as much as Singapore does. So to me, this says that even if Singapore got the lower tariff, that's the lucky part, because it's so exposed to what happens in the region and the rest of the world, I think they're going to maybe suffer as much as others when it comes to growth. I think Singapore is very hard to say, I'm going to try to stay somewhere else as the world goes through a global slowdown. I somehow will stay isolated from that. I don't think that's going to happen. As you say, it's an international hub for trade, for finance, and whatever happens in the region and in the world will have a clear impact on the Singapore economy.
All right, let's talk about supply chains. These tariffs are likely to disrupt established global supply chains. Do you think we'll see Trump's policies bring manufacturing back to the U.S., or will we perhaps see a global supply chain reorientation, perhaps?
I think this time is so different from 2018. In 2018, we sort of said, again, let's move things away from China towards Vietnam, because China is the one who's going to be always the enemy that is going to get the tariffs, depending on the next president of the U.S., higher or lower. right now, everyone is getting a tariff. These tariffs might be completely different in 2 weeks or maybe 2 days. So it's very hard for companies to say, let me change my strategy towards where. So here, I don't see a rewriting of supply chains unless everyone says, oh, let's go to the U.S., but that's an unrealistic scenario. That's not going to happen. The U.S. does not have a space to accommodate more companies because it's at full employment. So if companies want to go to the U.S., they need to hire workers, but unemployment in the U.S. is very low. Employment rates are very high. So there's no space for all the companies in the world to say, oh, I'm going to produce in the U.S. to avoid that. I think what is going to happen is the opposite. I think the world is going to isolate the U.S. because it is not anymore a trustable partner. And that's what I would do if I was a company or a country. I've been dealing with the U.S. because it's obviously a large economy, but also because it was a very reliable partner. Okay. Once it stops being a reliable partner, in some sense, to me, the incentive is the opposite. What if I can just deal with the rest of the world, which is also very big? There's tons of countries out there. There's lots of people outside of the U.S. Let's just focus on markets which are more reliable. So I expect to see that. It's not going to change the world in the next months. This is years where many countries, many companies might have to rethink their involvement in the U.S.
Good point about the complexity of shifting supply chains. But, Prof, what is next? Is there room for negotiation? Because I also read about a U.S. Treasury Secretary saying that he wouldn't advise countries to retaliate and, quote unquote, as long as you don't retaliate. This is the high end of the number. So do you think the tariffs could go any higher? And what can countries do to negotiate them lower?
I mean, I think there's going to be negotiation, to answer your question. The problem with negotiation is that you're facing a person on the other side, or a country, the U.S., that does not clearly state what the goals are. Because the goals are stated in a way which are not very clear. What is the final outcome that the U.S. would like? Sure, they want you to buy more things from them. But we went through this in 2018. China promised to buy all this from the U.S. They never did. And that's not very well defined. So there's going to be negotiation, but without a clear strategy. Now, Canada managed to threaten the U.S. and get some of the tariffs removed in the past. So again, maybe threatening is the best you can do. How can 200 countries be negotiating at the same time with the U.S. right now? Different numbers, different tariffs, different industries. I don't know how this is going to work, but for sure, countries are going to try. Of course, this is not good news for anyone. So every country now is probably calling the U.S., trying to figure out what could I do so that you remove the tariff from my country. But I don't see it happening fast enough because the list is 200 countries. It's not just one or two.
And looking at the long-term impact, if the tariffs remain at the announced levels, like you mentioned, we'll probably see a more isolated U.S. Will we also perhaps see a realignment for Asia to become closer to China, as well as other big blocs such as the EU and the Middle East?
I think so. I think the world is going to be getting closer to each other and excluding the U.S., and then obviously within Asia, you're going to see more integration. Maybe there's more integration between Asia and Europe. Europe is making a big effort to integrate with Latin America. Latin America would like to be more integrated with Europe. Again, all these things are going to accelerate. Not going to happen in 2 days because these are sort of long-term issues. But I think the world is going to pivot in that direction, and we're going to see more of that over the coming years.
Prof, going back to the issue at hand, is there any potential for ASEAN to coordinate in some areas, such as through perhaps regional trade agreements or even joint lobbying efforts at the World Trade Organization?
I mean, the World Trade Organization is not going to do it because clearly the U.S. is in violation of all the rules of the WTO, and I don't think they care about it that much. I think getting together and opening borders within Asia, I think that's a good idea. I think it's a good idea to play the opposite argument that says, look, integration is good. Let's show it. Let's not be the ones saying the same thing within our regions. Let's push for more integration. I think that would be great. And then maybe when it comes to negotiation and threats, coming together, I think will make a difference. Because a small country negotiating with the U.S. today doesn't have a lot of arguments to threaten the U.S., but a lot of countries together big economic areas could threaten the U.S. with tariffs or other measures that would hurt the U.S. economy. And maybe in that negotiation, the bigger you are, the more powerful you will be and the more successful.
You know, Prof, there's so much uncertainty. We have no idea what's going to happen. But do you see any silver lining at all in all of this?
At this point, unfortunately, I don't see any. Again, the only one is that maybe this is a wake-up call. And when we get a wake-up call, sometimes we come up with alternative arrangements for the world, alternative ways to think about trade that maybe in a few years will make the world better. But right now, I see a lot of uncertainty. I see a slowdown in growth, and I think a few months ahead, which are going to be very tough for the world economy.
Looking at the immediate future, Prof, what would you recommend to businesses in Southeast Asia that are dealing with this new uncertainty? Should they be preparing for long-term changes?
I mean, I think they need to prepare for a partner, the U.S., being volatile for at least several years and maybe more, maybe forever. I don't know whether this is just one presidency or a structural change in the U.S. So I think that's something that companies had not thought about before because they thought it was impossible. So that means looking at other markets. Other markets could be Europe. Other markets could be Latin America. But the idea that we have a stable and reliable market or partner in the U.S., I think people should forget about it and then act in consequence. It doesn't mean to pull out because the U.S. is a large market, but understand that it comes with volatility, erratic decisions, and having alternatives and diversifying would be a good idea.
All right, before we wrap up, Prof, let's get your final thoughts. You're an economist, so where do you see this heading in terms of the global economy, and how do you see U.S.-Southeast Asia trade relations evolving over the next few years?
I think the global economy over the next month, the next year, is heading for a slowdown. Again, I don't want to be too pessimistic, but again, using the word recession might not be that crazy as we speak. With what I know today, I think I would go into that word quite easily. Maybe things improve today, in the next week, but right now it doesn't look great. And I think the relationship between the U.S. and Asia, I think they're going to be damaged permanently. I don't think this is just a blip. I don't think this is a small sort of error in a negotiation. Again, I think this now makes people think that relationship is a lot more volatile than what they thought. And again, one has to act in consequence. I'm not saying break the relationship, don't think about the U.S. because that's not feasible, but it's just not what we thought it would be.
Thank you so much, Prof. It's definitely going to be a period of volatility. Thank you so much for your insights today. It's been a fascinating discussion. I'm sure our listeners have learned a lot about the implications of these tariffs for Southeast Asia. Here's Professor Antonio Fatas, Professor of Economics at the prestigious INSEAD Business School.
To listen to more great interviews, download our podcasts at audio.sg or download the audio app. That's AWEDIO, audio at the App Store and Google Play.